Good day, everyone. Trust you're doing well today. Today, we're talking about how the market traded last week and what may happen this new week. There is something interesting happening in the Nigerian stock market right now. And no, I'm not talking about the 0.12% gain we saw last week because honestly, that number is almost meaningless on its own. The most important question is what were investors doing underneath that, small number? The Nigeria exchange started August with the All-Share Index gaining just about 0.12% for the week, right? Now, from roughly 245,283 points on July 31st to about 245,574 points on August 7th. That is only around 290 points. Very small. Now let's put that in context. Say you invested 10,000 naira, right, in something that perfectly followed the index. A 0.12% gain, would be roughly 12 naira. So why should anyone even care? Because sometimes a market that barely moves can tell you more than, market that jumps 5%. And right now, investors appear to be fighting a quiet battle over what happens next. Basically, what I'm trying to explain is some are taking profit, some are moving money into banks, some are waiting, and some are probably asking themselves one very important question. Is this the beginning of another move higher, or are we getting closer to another correction? Let's look at what really happened. First, we need to remember where the NGX is coming from. The market did not simply rise into August without interruption, right? So earlier on in the year, the NGX reached a 2026 closing high of around 252,508 points. Then the market went through a serious correction. Then by late June, the ASI fell to around 233,000 to 236,000 area, depending on the dates and measure being used, right? Then buyers came back. The market recovered, and now in early August, the index is back around 245,574. So what we are looking at this point is not simply a market that has been going straight up. It's more like this: strong rally, major correction, recovery, consolidation. And that changes the story because investors who bought early in the year are sitting on a very different profit from investors who bought during the correction. And when people have made a lot of money, something very normal starts to happen, right? They begin thinking about taking some of it off the table. And this is one of the reasons I will not be surprised to see selling pressure in part of the NGX after such, a strong run. But here's something interesting. Not everyone takes profits is leaving the stock market, okay? Some investors are simply moving their money somewhere else. And that brings us to the banking sector. On Thursday, the banking sector became one of the interesting parts of the market. The NGX banking index gained about 1.53%, while the wider market only gained around 0.12% for the week. That difference does matters, because it raises the possibility of something called sector rotation. Basically, the money has not completely left the market. It has simply moved. And this is one reason the overall index can look almost flat while, important things are changing underneath. This is why I will not look at the 0.12% and, conclude that nothing happened. Something may have happened. We just need more evidence before deciding, exactly what it means. Now, the banking story is also interesting because there are real earnings behind it. For example, First Holdco reported about 942 billion in gross earnings and 321.1 billion in profit before tax in the first quarter of 2026. Basically, its profit before tax was up more than 72% year on year. Those are strong numbers, but there is an important lesson here, right? Strong earnings do not automatically mean a stock must keep rising. The stock market does not only ask, is this company making money? It also asks how much future growth is already, included in the share price. Basically, how much growth is already priced in. A great company can become an expensive stock, and an average company can sometimes become an attractive stock if its price falls enough. So investors need to look at both the business and the price. Now let's look at the other side of the market. While banks were attracting attention, consumer stocks came under pressure. The consumer goods sector fell about 1.75% on Wednesday based on the figures in our market data. Again, one day does not prove a trend, but it fits the bigger picture. Investors may be asking, where is the better opportunity now? And that question becomes more important after a market has already delivered a very large gain. Because when almost everything is rising, investors can make money without thinking too deeply about what they own. But once the market starts separating winners from losers, things change. Stock selection become much more important. This is the kind of market we may be entering now. So is the market about to crash? At this point, I would say no clear crash sign yet. But I would also not say everything is totally fine. Just buy anything and everything. Those are two different things. The market is still around 245,000 area, which means the recent structure has not yet broken. So the 244,000 area is still worth watching. But I would not call 244,000 area, a guaranteed support level. Because if the index moves below that area, I would not panic just because of one red day. Rather, what matters is what happens next. Does selling become heavier? Does volume increase? Do more stocks start falling? Does the banking sector lose strength? If all of these things happen together, then the story becomes even more serious. Then there is the biggest wild card, the Dangote Petroleum Refinery IPO. Reuters reported that the refinery is targeting about $5 billion through an IPO expected around October. If that happens, this could become one of the biggest stock market listings Africa has ever seen. Now think about what that means for Nigerian investors. Imagine you have 100 million naira invested across different Nigeria stocks, right? Then this new huge opportunity arrives. You now have a choice. Do you keep your existing stocks? Do you sell some of them and buy Dangote refinery? Do you hold cash and wait, or do you buy companies that could benefit from the refinery? This creates a very interesting situation. The IPO could bring new money into the Nigeria market, but it could also cause investors to sell some existing positions so they can, raise money for the new opportunity. So the IPO can create both buying pressure and selling pressure. And investors may start positioning for that long before the actual listing. So now what happens next? There are three main possibilities. The first possibility is a continued consolidation. This is my base case, right? The market moves up and down. Banks remain relatively strong. Some investors continue taking profits. Other investors continue buying selected companies. The ASI may remain around these high levels, for a while. This would not be a bad thing. Sometimes a market needs time to digest previous gains before making its next move. Now, the second possibility is a new bullish move. This happens if buyers becomes more aggressive. The ASI could, eventually challenge the previous high around 252,508 points. But I want confirmation. If the index rises, volume increases, more stocks participate, and banks remain strong, then the possibility of a genuine breakout becomes much higher. That is when the market starts telling us the buyers are back. Now, the third possibility is another correction. This is what I would watch carefully, because if the ASI breaks below the important 244,000 area, and we also see heavy selling, weak market breadth, and falling banking stocks, then the current consolidation story becomes much weaker. And at that point, investors may start protecting their gains. And once fear begins spreading, selling can become faster than people expect. So what's the game right now? Well, this is not simply a battle between bulls and bear. It's clearly a battle between investors with different time horizons. The investor who bought months ago may be thinking, I have made enough, let me protect some profit. While the investor who missed the rally may be thinking, this may be my chance to get in. The bank investors, right, may be thinking the earnings are strong, especially that of First Holdco. The cautious investor may be thinking, I will wait for confirmation. And the momentum trader may be thinking, if the market breaks the old high, I'm buying. All of these people can be right about their own strategy, and this is why the market can move sideways. So what's my verdict? Well, I don't think the NGX is showing a clear crash signal, but I also don't think we have a confirmed new breakout yet. The best description right now is the market is taking a breath while investors reposition their money. My base case will be roughly 40 to 45% probability of continued sideways and volatile trading, about 30 to 35% for a gradual move higher towards the previous high, then around 15 to 20% for a meaningful correction, and roughly 5 to 10% for a much sharper breakdown. Well, these are my scenario estimates, not guarantees, and the numbers can change quickly if the evidence changes. So what should you watch out for right now? Don't watch the ASI alone. Watch 5 things. Number 1, the 244,000 area. A sustained break below it becomes more concerning, especially with heavy selling. Number two, the banks. If banking stocks continue leading, that can support the wider market. However, if they suddenly lose strength, you should pay attention to that. Number three, volume. High volume with rising price can be encouraging, right? Why high volume with falling price can be worrying? High volume with very little price movement may mean buyers and sellers are fighting hard, right? So just watch out for that. Number four, market breadth. Ask yourself, are many stocks participating or are only a few large stocks carrying the index? And finally, number five, company earnings, revenue, profit, cash flow, dividend, growth, and valuation. Because eventually the excitement has to meet the numbers at the end of the day. So for now, don't get distracted by one green day and don't panic because of one red day. Watch the combination of, like I said earlier, price, volume, breadth, sector leadership, and most importantly, company fundamentals, because that is where the next major NGX move is likely to reveal itself. And when it does, the investors who were watching what was happening underneath the index will probably see it before everyone else does. Now, if you're looking to get regular stock recommendation and stock market tips for both Nigeria and US stocks, I have a Telegram channel where I share frequent market insights to enable you beat the market. So if you're interested, you can find the Telegram link in the description box of this video below. If you gain value from this video, please like and subscribe so you do not miss my next video. All right. Have a nice day. Bye.